All right.
How
This
you
is gonna
doing?
be this is gonna be kind of weird.
I
It's
know.
stormy outside, but
Well, I'm glad that we were proactive because we wouldn't want, the storm to knock out all the Wi-Fi and everything like it was doing earlier this morning.
yeah, 'tis true.
Yeah.
Well, I mean, I guess we should let the cat out of the bag so that way everybody's kind of like on the same page. Like,
Yeah.
you know, this is actually pre-recorded. So we're actually pre-recording the episode before the actual time that we normally go live. So there's going to be no shout outs for who was first in the chat. So we're going to have to trust and believe that each and every single one of you honors code, whoever's first in the chat or in the comments will post it. So we're counting on you. Without further ado, I guess, I don't know, Jolene. I don't even know how we should even do this because this is like so new to us.
Can you
Like,
cue the intro?
of course I can. Like this.
Yeah.
All right, all right, all right. Well, welcome everybody to Executive Education. I'm your co-host, accompanied by my wonderful co-host, co-creator and co-producer, and all things galactic and co-creator. Give it up for none other than the wonderful.
It's Jolene GC and the place to be. What does it, cousins, on this fine Tuesday? Almost said evening, but technically it's the afternoon. So
Yes, it is. Yes, it is. It's kind of funny because we made the lighting effects feel like it's later, but it's not, but it's kind of dark outside because of these dark clouds. So we're trying to beat a storm just so that way you guys are in the know. Like our lights have been like, and stuff like that. So we wanted to make sure that we give you guys the best. And of course, many of you have commented from last week on last episode where we were talking about sentiment. And so we wanted to carry that on into this conversation, which is very fitting for like what's happening in today's market, the economy, global economy. So we felt like it was very fitting to continue it on. The people asked, Jolene, so we got to give it to them. So we have to do it.
But before that, y'all need to like, comment, and subscribe if you haven't done so yet, because
please do. We would greatly appreciate it. And also, if you can, send it to 5 friends. Send it to 5 friends. Like, those 5 friends that you've been talking about, like, yo, you need to get in the market or whatever it is, or you need to understand exactly how things work. This is going to be an episode for them. So, like, a lot of things can be very gloomy in today's market based upon what you're hearing in the news and then also what you're seeing on a chart. And then on top of that, when you see that one person that's maybe missing some teeth talking about, like, don't invest in the stock market, you'll lose all your money. So, again, I'm just shout out to the uncles out there and maybe aunties out there, that are definitely, out there just trying to give you sage advice to the best of their abilities. But we're going to try to give it to you to the best of our abilities. So Jolene, where should we start today? Like, because we got a lot to get into before our potential power, goes out or whatever it may happen.
I feel like we're racing against the clock. Okay, so let's start with how the NASDAQ did today.
Okay.
Let's start
there. I think the NASDAQ dropped by about 1.5%. And I think that what we've been seeing from the NASDAQ is we've been seeing a steadily decline. I think really since the July highs, I think that was at the height of the market. And ever since then, that was the high. And I think that the NASDAQ currently right now is at 9.7% from its 50 or from its all-time high. And so some would say that the NASDAQ has now officially entered into correction. So, or has even in some cases retested that correction.
So, I mean, we should note that September traditionally is, kind of slower anyway, but to see these straight declines that can be kind of gloomy for the sentiment, seriously, it could be.
And
But
there's a lot of narratives fueling it too.
well, that's the job of the news, like doom and gloom. Seriously.
Yes. So naturally,
Mhm.
um, what I normally consider like as garbage months is August and September. And that's typically because of the fact that again, it's kind of like a vacation period. There's not a lot of trading that's normally happening. People
Mhm.
are on vacation. People are also trying to weigh in what they've, pretty much had to digest over the first, 8 to 9 months of the year. And then now it's like, okay, hey, now we're digesting it and now putting together a thesis for the next year incoming. So, there's a lot of questions that need to be answered. And it's kind of funny because right after garbage month, we normally have earnings. And so you start to see that the conversation typically switches from what's happening, which is the doom and gloom. And then they say, okay, hey, well, earnings will now tell the story. And
Mhm.
that's where you start to see the sentiment. Like the sentiment right now is like people are nervous. Like every single August and September, the market gets very jittery. It gets very nervous. It's not every single time, but majority of the time, it gets pretty jittery, because of the fact that we're either entering into correction territory, depending on the speed of how we got into correction. This has been quite the healthy, like, downturn from the July highs
Mhm.
coming into the September lows. And then essentially it's like now the market is going to have to make a decision. And of course, the market is having to digest a lot of the conversation that's being had alongside weighing out valuations from companies that have had such an exorbitant run over the first 8 months or first 7 months, I should say.
So this over the weekend, as per my usual wealth ritual, I was listening to Seeking Alpha's their weekend, well, it's like Wall Street Breakfast, but it's their weekend edition, and they were talking about the Fed and a hawkish pause. And so, how does that play into market sentiment?
So there's a lot that plays into it. So we talked about the seasonality part, right?
Mhm.
It's slow.
Right?
But then there's also a thing called portfolio rebalancing. So portfolios are also necessarily need to get rebalanced. So that is going to have to take place. And normally investment funds rebalance their portfolios before the end of the quarter or the fiscal year, depending on however they see it. So that's going to happen. And that can lead to selling pressure in August and September. Then there's the other things that we look at as it pertains to, is it really pointing towards a negative outlook? So you kind of mentioned like the Fed raising interest rates and stuff like that. The market has kind of like priced in what they believe that the Fed should do. And then of course there's the data, and then there's what the Fed does.
Mhm.
Well, hold on. Let's rewind it back a little bit. There's what the market believes that the Fed
Okay.
should do,
Right.
and then there's the data.
Okay.
And there's the data that literally like either will like fuel a person's thesis or direction of where is it that they should go. Then there's Fed folks who have no vote at
Mhm.
all that are also given their opinion. And 9 times out of 10, they're normally getting the most airtime. And then of course there's the voting members that normally go through the meeting, and then they have to make a decision based upon the data and then looking at the outlook. So if the outlook is negative, and so then that means that companies may issue, like, people are thinking that companies may issue weaker guidance based upon what we're seeing that's happening in the economic landscape, which plays negatively in the short term, possibly as it pertains to sentiment, or it could possibly lead towards even a much more negative longer term sentiment. But given in how is it that things have been playing out, it's kind of looking like we're headed towards that actual typical what everybody else has seen
Mhm.
before pandemic. This is the type of behavior that you've been accustomed to seeing if you've been in the market before the pandemic. This is the average behavior that we see that the market does, whether we're going into an election year or whatever it is. July is typically the high, and then August and September is kind of like, okay. Now you mentioned, now the interesting thing to look at that as it pertains to Federal Reserve, like I said, inflation can curb exactly what is it that high interest rates or high yields always will have an impact as it pertains to stocks, because it really has us really like, okay, hey, are we putting a cap as it pertains to what those valuations are, given cost of capital? Of course, election cycle's coming up, but we're technically not there yet. We're getting into the swoon of those. But then there's also this thing called just a simple lack of catalyst.
Mm.
So,
God.
like there's a lack of catalyst in the temporary time as it pertains to like, okay, hey, well, what's been like over August and September? What was the actual catalyst to really drive stocks higher?
Nothing.
Like Nvidia's had a great run,
And it's hot. It's
but in
hot.
the months of August and September,
Mm-hmm.
like what's the
Naturally
catalyst?
down, right?
Like we know, like we saw, like with Apple, we know that we're getting into that seasonality part, and I think we kind of like caught an early glimpse of what the sentiment is for Apple based upon what we saw from those initial numbers as it pertains to sales within the iPhone release. We didn't really see the sales. We just saw like, pretty much the fanfare and everything else, and the lines stacked around there was like the lines heard around the world, like where
But
it's Saudi Arabia, Dubai, and all these other places.
I think people are excited about the USB-C. Because when we were talking
Yes.
earlier today about recording and like what that type of flexibility you have when that whole thing switches over.
Yeah. I mean, there is that. But
Because
I look at it from the standpoint. Go ahead. Go ahead.
I was gonna say, other than that, it didn't seem like there was anything major that would drive those kind of sales for that phone.
I mean, USB-C like really like it really adds in a lot of flair because what you can do with the device, and I so can't wait to get back to pre-recorded episodes because I'm gonna actually do something a little special. For those of you who know that I'm a huge fan of MKBHD, shout out to Marquez Brownlee if you watch the show. But I want to do it a little bit different as it pertains to a twist because I always went to YouTube to watch like tech reviews, but it always looked at it from one specific angle versus like people who look at it from a completely different angle, like me. Yeah, I review it for I like a good review for specs, but I like a good review as it pertains to like, okay, hey, is this something that's worth, the money in my, in my portfolio to be added to that number. So just for perspective.
Oh, I'm about that.
So
content.
Yeah, we're trying out here. We're trying. There's only so many hours in a day. So I think that those are the major things that we look at as it pertains to like when we think about September sentiment, where it's like it gets to those lows, and it's like, okay, hey, I think that October is going to be like that bounce if the negative catalyst starts to get a little bit long in the tooth where people start to get exhausted. I tend to notice, especially in a typical market, if we're trading in a typical market, I tend to find that people get over bad news fairly quickly and they hold on to good news a lot longer. So I'm wondering, will that technically play out, as we see, this year progress going into the close of 2023? Like that's going to be the biggest thing. Like, all right, we're getting some bad news as a percent, like consumer sentiment low. Why is it that consumer sentiment is driving low? Well, one, inflation is driving decisions, but then also let's also step back a little bit. I also strongly believe that one, it's the economics that play a role, but I also believe that it's also businesses that also play a role that take advantage of the economics in their favor. There's that part too. But then there's also the part where it's like, okay, hey, like if you haven't been paying attention, like take a person who hasn't been paying attention at all in the market throughout the year. And then they just happen to like, and then let's say, okay, hey, but I see that prices are low. But then I'm just happen to see that, okay, hey, I'm stepping in today and I'm just seeing just nothing but bad news. Well, based upon what I'm seeing right then and there will literally shape my focus as it pertains to like, okay, well, should I be buying depending on the type of news sources that I'm watching or depending on the type of media sources and information in which that I consume. And I think the biggest thing that it's like we go from one side of the extreme to the other. So either we're at very good sentiment or we're at very bad sentiment. It's never really like that even balance in between where it's just like, okay, when you find yourself in that even balance of sentiment, it's more so in the sense of, okay, what makes sense right now?
Okay.
Like what makes sense in the sense of like, okay, hey, yeah, we still see inflation high, but yet at the same token, all data points are pointing to the fact that inflation is coming down, but yet at the same token, it's not coming down fast enough in the rate that people expect it to. But yet at the same token, it's still coming down. And the Fed is saying that they want to get to a 2% inflation rate, but people are automatically assuming that the Fed is saying that we want a 2% inflation rate in 12 months. When in reality, when you're thinking about policy and you're driving monetary policy, they're looking at something over the next 3 to 5 years.
Okay. So question then, I'm glad you brought that up, because one of the things that I've noticed, like, as a theme every quarter or so, is, cousins who are looking to like re-enter. And
Mm-hmm.
so it's one thing if the market is like running hot, then it's
Yep.
bullish. Then you can be
Mm-hmm.
like, well, it's not a good time because prices are high right now, right?
Prices are high.
But then when it's low and it's bearish, then you're kind of like, well, is it going to get any lower? Is this a good deal? Is this the best deal I could get? Because what if it goes lower? So there's all of that. And then not everyone will admit
Mm-hmm.
it, but I know FOMO, fear of missing out, plays a huge
Mm-hmm.
role in investment decisions. And like we always say, FOMO is not a strategy. And
It's not.
so when we're looking at a market like this, especially in the context of seasonality, where you,
Mm-hmm.
like you said, August and September are the quote unquote garbage months, like what
Mm-hmm.
do we need to consider when it comes to re-entry, like re-entering the market? Let's say you exit
So it's
your positions and you've been chilling on the sidelines for a minute and now you're looking to re-enter.
so I mean, it's kind of interesting, and it's kind of like, okay, hey, it's like you sell in Yom Kippur and then buy on Rosh Hashanah, like those types of things as it pertains to sentiment across different cultures, right?
Mm-hmm.
You know, and it's so the market will always provide opportunities, throughout the year. I tend to find that the market will always produce at least 6 opportunities in a year, in a 12-month calendar year, which I guess that's the only calendar that you have, which is 12 months, unless you're in a totally different galactic universe. Well, I mean, the market will provide you at least 6 opportunities every year. Whether you're bullish or you're bearish, whatever your thesis is, wherever your focus is, wherever your trajectory or where you see the market going, it's going to provide you opportunities at least 6 times in a year. And so let me cook real quick. Let me cook.
All right.
All right. So July is a high, right?
Mm-hmm.
August and September, naturally garbage months. So there's 2 potential opportunities right there. Because let's say we drop to the lows in August, and then essentially we come back to retest those lows in, let's say, late September. Okay, so that's 2.
Mm-hmm.
That's 2 opportunities that the market gave you. All right, and then let's not forget about like what takes place after January earnings. Typically, the market tends to, get a little bit, flustered, because those are the folks who wish that had probably held for about a year and a day.
Mm-hmm.
And so typically about March and February, March are naturally months in which that the market also brings a little bit more volatility as well. Not as much as August and September, but it'll also provide you opportunities as it pertains to either not really correction, but probably just a small pullback and ultimately a retest of that pullback. So there's that. And then there's those things in between, like let's say the misnomers, like for example, a company, it's very rare. Like, don't get me wrong, you're going to have companies that are going to have great earnings for 4 quarters. They're going to have solid 4 quarters. But then there's those moments where it's like, investors get exhausted, or just maybe seasonality wise, like for example, Apple's naturally weak in the second and third quarter. And then it typically picks up in the fourth and first quarter, because that's normally the holiday sales in which that it picked up for Apple.
Mm-hmm.
Everything is pretty much carried on from services revenue and a few like iPhone sales and stuff like that in the second and third quarter. So with that type of weakness, it probably is going to give you some type of opportunities within those times where it's like, okay, hey, the earnings didn't really hit as much as everybody thought it was. So you're probably going to have, say, for example, the overreaction of a stock. And then, of course, there's going to be always some form of news that also transpires every single year that's also going to possibly rattle the markets, especially in the times in which that we're living now, where everybody's feelings based. So, given in the sense that we live in the feelings based world, then, markets are easily going to be rattled, and volatility will significantly spike just based upon like, let a person say, I feel, and then boom, the market gets volatile. So again, it's like, that's why I say like, you're going to come through those points in time throughout a fiscal year that you're going to find that the market is going to give you opportunities.
Mm-hmm.
Whether it's an overreaction with a retest, a pullback with a retest, or say, for example, a correction with a retest. And each single one of those are going to bring its own different sentiment. So, for example, like I said, there's no significant strong catalyst that literally points us towards a specific direction in August and September. And then let's just say portfolio rebalancing in, let's say, February, March. And then let's just say that, say, for example, seasonality wise or earnings wise, or let's say whatever it may be. Those things are moments in which that we look at and say, okay, hey, is my thesis still intact? Is the long-term thesis still intact, or whatever my time horizon thesis still intact? If it's not, if this is something that can literally alter. So for example, if we see the US dollar go up, then we're probably going to see equities also struggle a little bit. If we see treasuries go up, then we're probably going to see equity struggle a little bit. Mm-hmm. If we see that, say, for example, recessions on the horizon, or if we're in a recession, then that's going to have an impact as it pertains to investor sentiment. Because again, it's like there are some companies that do well in recessions, but that doesn't make them recession proof. They're still going to probably have some type of hit, whether you feel it in the beginning, in the middle, or in the end. You're going to see that no company is ever exempt during a recession. And so those are the things in which that we look at when we think about sentiment, when we think about like, okay, hey, that mindset. Mm-hmm. Of, okay, hey, well, what is the market talking about right now? What is the market looking for right now? That's the other part, like that a lot of folks don't really like take into consideration when we think about sentiment. Mm-hmm. What is the market looking for? So like, for example, in September and August, where we currently are right now, like, well, we're in September, we're coming to the close of September. What is the market looking for? The market's in my opinion, the market is looking for a sense of some type of, reinforcement as it pertains to some narrative that can stand versus, okay, we're getting choppy in this environment because of the fact is we're hearing this part, but we're also hearing this part. And there's really no guidance that literally tells us, okay, hey, well, what should we be really looking at? Okay. And you're going to find, here's a spoiler alert for everybody. Here's your spoiler. So write this down. The thing that you're going to get to that when everything starts to feel or hear or sound or look, when it starts to seem like it's unbalanced, when the market seems unbalanced, the one thing that will always rebalance everything is earnings.
Which is right around the corner. Because that's what tells
earnings. Earnings tells the true story. Of course, we have the temperature setting of what everybody's feelings are, what everybody thinks, or what everybody believes right now. But then there's also the data point there's the data that comes out that actually says, okay, hey, that this is what it is. Right now, everybody is telling you how it might be versus we're waiting on the earnings time for the companies to tell you how it is.
All right, that makes really good sense. So, okay, you had mentioned volatility. So I want to look at the VIX and talk about, well, I kind of want to compare, 2020 and like the average of what the VIX was, because we know that was like, a
ridiculous. That was unprecedented.
Right. So compared to, levels now, just so we can kind of have a reference point, and then talk about like how that plays into market sentiment.
Sure. Okay. So if we're looking at the VIX,
it's at 18.9.
It's at I was gonna say we're getting close to those correction. Normally when you get to like about 20 in the VIX, that's normally a sign that we're headed towards a correction, or that we're pretty much slightly in a correction. And it's kind of interesting because if we look at in 2020, the VIX got all the way up to what is it at its height. It was a very short-lived period, but March 2020, you saw the VIX go to 85.
I'm so glad I did not look at it during that time.
Look, I mean, the VIX got to 85.
I was like, oh no, I can only
right. And naturally, what you see is when the VIX gets high, the higher that the VIX gets, then that lets you know that essentially that more volatility has entered into the chat, of course. But then on top of that, then that's normally when you start to see that, okay, hey, stocks become more volatile. And then on top of that, you tend to start to see when we get to 20, you start to look at that as a correlation of, okay, VIX at 20 or between 18 and 20. And then stocks, how many of them are trading at 200-day moving averages or between or below 50 or in between 50 and 200-day moving averages. Normally when you see a VIX elevated at 20, then you could probably assume that we're probably either headed towards correction or we're in correction. If we're at 24, then yeah, we're greatly into correction, probably even touching bear market territory in the short-term period. But again, the VIX is kind of like that thing where it's just like, okay, hey, it swings and then we're gone.
And also keep in mind, everyone, like the VIX is really, it's a short-term indicator. So it's about what, 30 days or so. So
30 days.
30 days. So don't think of it as just like, oh, doom and gloom for the whole year or whatever or whatever time frame you have in mind. It's about 30 days. So
yep. And it's kind of interesting because, one of the things I would say is, if you're looking at the VIX, if you get the chance, go pull up a chart. I can pull it up if you want me to, if that helps.
A little visual aid.
Okay. All right. I'll provide a visual aid. So let's see here if I could pull it up for everybody. Okay. Let me know if you can see it.
Yes, I can see it.
Okay. Good. All right. So as you can see, this is on a 5. I think I put this on a 5-year. Yeah. So I put this on a 5-year. And as you can see, this was pretty much our 2020, right? And then of course, we kind of like came down to these lows. And so again, we kind of hit this area where we kind of hit this double, we kind of formulated this W forming. And so again, it's like, okay, hey, well, we kind of like closed directly at that top where it's at 1893 for the VIX. Now, of course, the highest that we were at for the VIX was back in March for this year, which was at 30. Now, do I believe that we're going to get there? I think that ultimately, if we see that the 10-year gets to 5 before the year is out, then yeah, you'll probably see the VIX go higher. But again, I think that if anything, the 10-year getting to 5, I think that that's going to be ultimately if anything, a slow progression, or it could possibly happen very fast. And then ultimately all right, it's time for us to fall back. But again, it's going to be data dependent as it pertains to what we're seeing from inflation numbers. But again, it's like, just as much as we see the VIX is also still in somewhat of a bearish downtrend. So the question is like, will that still remain, or ultimately is the VIX going to break out?
Okay. So thinking about noise versus like actual impact in the context of, sentiment and thesis. Okay. So there are 3 news pieces, I don't know,
Yeah.
that I want to talk about.
Okay.
Like think through how, is this noise impact, like things that you would consider. So first thing, I'll just say all 3 of them, then we can just work our way through. Okay. So we have the writer's strike.
Okay.
That was in the news today. It being, somewhat over. And then potential government shutdown.
Okay.
And then what does it look like, when there is news of a potential like new CEO or some type of change in the C-suite, and how that might impact thesis,
the stock,
the stock and sentiment and all that stuff.
Okay, so which one do you want me to take first?
Let's go with writer strike.
Okay, and by the way, I want to send a special shout out to Kadia and her husband Terry. They both work in Hollywood, so and also a cousin Jeremy as well. We salute you all. But so let's talk about it. So the writer strike is, of course, for the writers. We still haven't seen the actors side come to any form of a tentative deal. I'm kind of like in the camp where I think that if we see that the writers part like comes to its close, I think that it's the actors part probably won't be that far ahead. So what does that look like as it pertains to the writers portion? I mean, that's only a part of the pie because of the fact that you still need folks to be on the screen in order for those things to happen. So I think that that's the reason why I think that they're going to go hand in hand. And I think that the biggest portion was for the writers because, they started like getting, really kind of like wiped out, especially given in the sense that a lot of, productions were like literally, you know, shortening up their time as it pertains to on production and everything else. So, and then of course, there's this looming question as it pertains to artificial intelligence and Gen AI.
Mhm.
What does that do for their business, or what does that do for the industry? And mind you, it's like they're not the only ones that are facing this. Like even software is facing that. Um, but it hits very close to home as it pertains to the folks within the entertainment space. And so I think that honestly, when we think about sentiment wise, of course, that's going to have somewhat of an interesting take on what we find out what that deal is between the writers as well as the actors, because then it's like it's going to eat into possibly bottom line, where we have to rethink bottom line of like production costs and stuff like that. And then when you think about that production cost, does that raise the cost of, say, for example, films production, or like if production costs has rose, then will that also rise the cost of content, like the cost of like watching content? So will Netflix raise its prices due to that, or many of the other streaming providers or networks, will they raise their prices in order for that to like transpire? Will movie tickets also raise in price? Will that create a whole new set of can of worms as it pertains to inflation for the consumer? And can the consumer stomach that? What does that look like as it pertains to sentiment? And see, that's the question. We don't know. Those are the things that we don't have answers to.
Mhm.
We don't know until we actually see what has been written down on paper, what has been inked in those deals. And that's the question. We could see the same thing, well, not really the same thing, but like if you look at UAW as it pertains to a 40%, increase on a 32-week hours, or a 32-hour week, what does that do for businesses? Well, that's going to raise the cost as it pertains to vehicles. And then you push that cost over to consumers. And will consumers want to buy those products? And if they don't buy those products, then that's going to eat into profit margins. If it eats into profit margins, then, what does that do for, say, for example, the stock? And if essentially, you see it starts a domino effect.
Mhm.
That's the honest way that you gotta kind of look at sentiment, where consumer sentiment like literally brings, it's not just one question that needs to be answered. It's a domino effect of questions that we look at, that is like, okay, hey, where it, I look at sentiment as a slippery slope, whether good or bad,
Mhm.
because if it's a good thing, you're going to ask a series of questions until you get to a point where you're like, okay, I feel complete as it pertains to all the questions that I've asked, and I feel like I got the answer,
Mhm.
or all my questions have been answered. 9 times out of 10, it's probably going to produce about 21 questions that need to be answered when we think about sentiment. And
Okay.
so whether good or bad, and I think that that's the part whenever there's questions that go unfilled, or that aren't answered, or that can't be answered, then that's what can potentially drive negative sentiment. Because again, if you think about the psychological part of it, the
Right.
human mentality is so eager to hate something that it doesn't understand, and it's also so eager to ultimately be nervous when there is also things in which that are not that are not understood, or that can't be explained. Then that produces essentially negative sentiment.
Okay, so then for the potential government shutdown.
Yep.
That's like an economic thing.
Look, I look at this like, honestly, this is quite asinine. Like, this is very asinine, that
Mhm.
the fact that you're playing Russian roulette with the United States government as it pertains to just getting things done. And it's like, it really goes to show you, like, okay, hey, you're playing Russian roulette with not only just like and adding politics into it, but we get it, it's politics. But at the same token, let's pull the politics out of it. Let's look at the economic effects. You got folks in whom which that, if you think about it, let's put a stat out there just for giggles, and feel free to, correct me if I'm wrong, and that's okay. Let's just say that 60% of the US economy is living paycheck to paycheck. You know, or
Mhm.
let's say 75% of the US economy is living paycheck to paycheck. If they make $150,000 and yet they're still living paycheck to paycheck. Now imagine all those government workers that are living paycheck to paycheck, and imagine all those military folks in whom which that their families also rely on, say, for example, those funds to come through. Now imagine what that has impact on, as it
Mhm.
pertains to, one, bills, utilities, mortgages that need to be paid, childcare. all those types of things, it produces a domino effect as it pertains to like what is it that we're seeing that also like plays a role into a looming recession. Like when we think about it, like, you know, a lot of folks say that, you know, it's kind of like tied to the Fed, but you also have to look at the spending that the United States government is doing at the same time that the Fed is doing its tightening. So the Fed is trying to tighten, whereas the government keeps spending. So it's just like, okay, well, what are we going to do here?
We're gonna fall off a cliff. No, I'm just kidding.
So again, when we think about the sentiment, right? Okay, let's ask some questions. All right. So if the government goes into shutdown October 1st, I mean it's the first of the month. Okay, how many people's bills are going to get paid? How many people are going to be on a moratorium as it pertains to getting their bills paid, where they have to like literally talk to their landlord, you know, hey, you understand my situation. It is what it is. You know, there's that part. Then on top of that, what's going to be the domino effect for other services or other related areas out there that normally rely on, say, for example, and we're just talking about fixed expenses. We're not talking about luxury expenses,
right?
Fixed expenses. What does that do to the bottom line as it pertains to like other services? Like even you can even put in things like, you know, their monthly Netflix bills. If you have to choose between keeping your lights on or keeping your water on, or ultimately keeping your mortgage, you know, the fact that you live in a house, you know, Netflix, if it takes a few dollars away from that, then the consumer is going to have to make that choice. And then from that, what does that do as it pertains to consumer sentiment?
Yeah.
So like I said, it's a series of domino of questions that again is like when they go unanswered, then it produces a negative sentiment. Even if the answers do get answered and people don't like the answer, it's like you got two things that can go wrong and only one thing that can go right. So I think that honestly, it's like, you know, the fact is that they're going to try to get a temporary deal in place, which is like kind of like this whole kicking the can down the road. I'm not a fan of that, but again, you know, I think that honestly, they need to sit down, come together, and literally formulate a deal that actually makes sense for the American economy.
Yes, I agree. Okay, so last thing, this is, I guess, more general, but like the reason why this came to mind was, you know, with executive education, we talk a lot about the C-suite and the management, who's running the company, and so Jeff Bezos, you know, will be stepping down as CEO of Blue Origin. There's going to be a new CEO by the end of the year. So, how do we take that into consideration when we're thinking through how that might impact sentiment, stocks? You know,
is Blue Origin publicly traded?
I don't think it is.
I don't think so. So, like, you know, I don't think that it's going to have that much of a negative sentiment. I think that Amazon though, could, depending on like, you know, like especially what he brought to the table. But, you know, I think that, you know, where Amazon's at today, I think that they got other bigger fish to fry, like AKA the FTC, which
anyway, we need a sound effect.
I tell people I'm gonna leave old girl alone, but you know, you know, and when it doesn't work out, it's gonna look like this.
Oh Lord, your favorite.
So, but I mean, all in all, like when you have a C-suite move, right? Anytime when you have a C-suite move, you know, depending on how influential the person was at, you know, said company that is now exiting the company, and then the person coming in, you know, that's pretty much what people look at when people don't understand the person's track record or understanding the true value in which that they bring to the table. You know, I think that, you know, this is a good look for Blue Origin because of the fact that this person has worked with Jeff Bezos before. And essentially it's like, you know, who better to know the talent at the C-suite than the person in whom which I was running the helm at Amazon. And of course, being able to make such a decision that, you know, of course, Jeff Bezos is highly still invested into Amazon, given that he is the founder and he still owns a significant portion of Amazon. You know, again, you know, okay, hey, making that conscientious decision of me bringing this C-suite person over, will that have a significant drastic impact on, you know, the main thing, which is, you know, the thing that keeps, you know, the family's legacy and wealth running. And I think that, you know, given in the sense that he made that conscientious decision, I think that he believes that, okay, hey, that this is not going to have such a magnanimous impact on Amazon, given in the sense that they have so much redundancy at the company. that somebody can definitely step up in their place and has already been well groomed for that position. So, but in companies in which that don't, like for example, when Steve Ballmer followed after Bill Gates, everybody thought that it made sense, but then the company struggled over a period of time. Now, he was very much so influential. He was very much so a sales guy. But again, look at the innovation that also struggled within Microsoft. And then, of course, after Steve Ballmer, you brought in Satya Nadella, a person who's a true like engineer and architect, but just also has to happen a C-suite mind. It brought back and restored a lot of confidence back into the company Microsoft and seeing what it is today. Like, for example, when Steve Jobs passed away and passed on the keys and the torch over to Tim Cook, everybody was just like, oh, well, the stock suffered for a few days. And then until people started to realize, look, technically Tim Cook was the ghost. It was the ghost in the shell of the machine the entire time, like making sure that everything was set up correctly. He did a lot of the logistics and everything else. And when they started realizing that he was very much so primed from being a CFO and understanding exactly what the company needed and understanding how it worked, the stock ultimately rebounded, and then it sits at where it sits at today. And after a portion, it's like a portion of that is part of Steve Jobs' plan, but then at the same token, we're well past Steve Jobs' plan, and now we're in the world of Tim Cook. We're in we moved into the Tim Cook era. So again, it's like in certain different cases, it's like it just depends upon what the leadership represents and who's incoming, and then on top of that, like what is it that they're leaving behind? If they're leaving behind something that is, magnanimously influential, like for example, imagine Elon Musk leaving Tesla and then putting into the hands of, let's say, Franz. That's going to stir a lot of conversation as it pertains to like, okay, is Tesla still going to be Tesla, after this man is gone? Will the culture at the company still be the same? And let's be honest, whenever you bring in a new C-suite, the culture definitely takes on, not immediately, but over a period of time, it will take on its own, identity based upon who's leading it. Like Steve Jobs led Apple in a completely different way than Tim Cook did. Steve Ballmer led Microsoft completely different than the way that Bill Gates did. And Satya Nadella ran it completely different. Andy Jassy, though that he was running Amazon, for quite a bit of time before Jeff Bezos had even stepped down, he was already CEO of X divisions within Amazon that were successful. And so again, it's like, but the thing is, will the market give people grace? And that's the thing. When there's not questions answered, or when people don't understand, then that's going to ultimately drive sentiment.
All right. Well, Mark, okay, we got everything that was on the list in 43 minutes or so. So
we did it.
We did it. Yeah. So that's all she wrote.
Well, we actually got here right in time because this is looking gloomy outside. All right. So thank you guys for watching. I know that, it's not the same full flavor of us being able to do what we normally do here at the Come Up series, which is, read some of the things in the chat. But like I said, please leave your comments down below and write any questions that you have. I mean, what are the things that stuck out to you in this conversation? What are some of the questions that you may have from this video? Did we answer your questions as it pertains to sentiment, and how is it that sentiment is looked at? And then also, how is it that you look forward, moving forward? If we did, great. If we didn't, like I said, leave the questions down below, comment. We definitely want to hear from you. Until next time, I am Mark Monroe.
And I'm Jillian GC, and the place to be.
And this has been Executive Education. Oh, wow. This is what happens when we're not live. All right. We will see you guys in the next one. Peace, y'all.